Hello students, welcome you all back to the lectures of corporate accounting. So far we have completed 4 topics: liquidation of companies, amalgamation of companies, internal reconstruction, and acquisition of business. So after completing 4, now we are going to start the next topic, accounts of banking companies. Before that, thanks a lot for watching my videos. I'm getting day by day, a number of views are increasing. I'm getting a lot of comments from the students. So students are having some queries regarding different type of problems. Inshallah, in the coming videos, I'll give more and more different type of problems. We'll cover up different type of problems. But thanks, keep watching, give the comments and keep sharing. And my request, my suggestion to the students, please don't ignore the intro video. That is more important. You can be able to understand the concept. You can be able to understand the concept, then only you can go to the problems. So all the best. Come on, let's start the new topic called accounts of banking companies. So in this video, in this topic, we are going to study how the accounts, final accounts are prepared by banks in India. In India, the banking companies are governed by Banking Regulation Act 1949. So according to the Act, the definition of the banking is accepting for the purpose of lending or investment of deposits of money from the public, repayable on demand or otherwise, and withdrawable by check, draft, order or otherwise. This is the definition given by Banking Regulation Act regarding banking. Now, what are the books of accounts of banking companies? Banking companies keep a number of records, books. Example, the following are some of the example of books maintained by banks: receiving cashier's counter cash book, paying cashier's counter cash book, then current accounts ledger, saving bank accounts ledger, fixed deposit account ledger, apart from that loan ledger, investment ledger, bills received and purchased ledger, then acceptance guarantees given by the customers ledger. Different types of ledgers and books of accounts the banks will maintain. So slip system of ledger posting. The next topic is slip system of ledger posting. Actually, the banks has to maintain up-to-date record of all the transactions with the customers. That means the banks will receive the customer, the bank will pay the customer on behalf of customers. The banks must keep up-to-date all the record of all the transactions with the customers. So in order to expedite the recording system, a slip system of ledger posting will be followed. It's not a separate system of accounting. It's a method of accounting in which directly ledger posting will be done on the basis of slips without passing the journal entry. Normal procedure is first we pass the journal entry, later on we post it into ledger account. That method will not be followed. Directly posting into the ledger account on the basis of slips. The slips are the paying in slips and checks. These are the slips on the basis of which directly ledger account posting will be done. So mainly the purpose of this slip system of ledger posting is to expedite the posting so that all the customers' accounts should be up to date without any time lag. That is called slip system of ledger posting. Now, preparation of final accounts. Preparation of final accounts. So RBI has prescribed a revised format of preparing the profit and loss account and balance sheet. And this revised format was applicable from 1st April 1992. Still the same format is going on. So every bank in India must prepare the final accounts according to this new format. So now we are going to discuss what are the provisions of the new format. Now see carefully. Format of balance sheet. Balance sheet of dash as on dash. Thousands omitted. And 3 zeros will be omitted. Example, if 10,000 is there, the last 3 zeros will be omitted, only 10 will be written. Only 10 will be written. Similarly, if 1 lakh amount is there, we remove 3 zeros and take 100. So thousands will be omitted. So actually 3 columns are there, but for the sake of simplicity, I have taken only 2 columns. That is schedule number column and current year's amount. Apart from that, the bank RBI has prescribed one more column. Previous year's amounts should also be shown. But now only current year's amount I have taken. Now capital and liabilities. It is a scheduled based system of keeping final accounts. Scheduled based system means the balance sheet and profit and loss account will be concise. The details of all will be shown in the notes forming part of financial statements. Schedules forming part of financial statements. So here in the capital and liabilities we have 5 schedules. That is schedule number 1 capital. Schedule number 2 reserves and surplus. Schedule number 3 deposits. Schedule number 4 borrowings. Schedule number 5 other liabilities and provisions. These 5 schedules are on capital and liability side. So you have to remember, you have to by heart all these schedules. The 5 schedules we have seen in capital and liabilities. Now from 6th to 11th schedule are in the assets. 6th schedule cash and balances with RBI. This is the 6th schedule. 7th balances with other banks and money at call and short notice. 7th schedule. 8th schedule investments. 9th schedule advances. 10th schedule fixed assets. 11th schedule other assets. Total. So 5 schedules, 1 to 5 schedules are there in capital and liabilities. From 6 to 11 schedules are there under the assets. Now the total of liabilities and assets must be equal. And below the total, below the balance sheet, 2 more items will take contingent liabilities. That is schedule number 12. And bills for collection. No schedule for these bills for collection. But these 2 items are below the balance sheet. It will not come in total. It is just an information provided. Right? So this is the format of the balance sheet. Again I repeat, 12 schedules are there in the balance sheet. In the balance sheet we will take 12 schedules. First schedule capital, second schedule reserves and surplus, third schedule deposits, fourth schedule borrowings, fifth schedule other liabilities and provisions. Over. Now assets, balances with RBI, sixth schedule. Balances with other banks and money at call and short notice, 7th schedule. Investments, 8th schedule. Advances, 9th schedule. Fixed assets, 10th schedule. And other assets, 11th schedule. That's all. This is the total of the assets. Below the total of the assets, we'll write contingent liabilities, schedule number 12. Bills for collection, no schedule is there. This is the format of the balance sheet. Now we'll come to the profit and loss statement format. The format of profit and loss account, profit and loss account of dash for the year ended dash. Thousands omitted, last 3 zeros will ignore. Then schedule number, amount. Now here profit and loss account is divided into 4 parts. The first part is income part, second part expenditure, third profit or loss, and last 4th one appropriations. In this way we divide the profit and loss account into 4 parts. The first part is income. Under income 2 schedules will take. That is 13 and 14. Schedule number 13 interest earned and schedule number 14 other income. The total of the income. Only 2 items we have taken under income. Interest earned, other income. That's it. The total will be taken. Now expenditure. Under expenditure 3 items will take. First interest expended, schedule number 15. Operating expenses, schedule number 16. Provisions and contingencies, no schedule will be there. The total of these 3 will be the total of expenditure. Now see, the bank will receive the interest and the bank will pay the interest. The main income of the bank is interest. So on deposits, the banker will pay the interest. On advances, the banker will receive the interest. The banker will pay the interest to the depositors. The public will deposit the money with the bank. The banker will pay the interest. That is called interest expended. That is an expenditure. Similarly, the banker has given the loans and advances to the customers. On that, the banker will charge the interest. It's an income. So it is interest earned. So you have to be clear in mind regarding which is the interest earned and which is the interest expended. Simple rule. Interest on loans is interest earned. Interest on deposits is interest expended. This rule you remember. So total of income you have taken, total of expenditure you have taken. Now profit or loss. Subtract income minus expenditure will get the net profit for the year. This is the total income and this is the total expenditure. So income minus expenditure will get net profit for the year. Similarly, profit brought forward. Some profit is there, surplus is there, which is coming from the previous year. So brought forward profit, if it is given in the problem, that will be added. So we'll get the total profit. So profit for the current year and profit brought forward will get the total profit. Now appropriations means division of the profit. जो प्रॉफिट आया है उसको डिवाइड करेंगे, अप्रोप्रिएट करेंगे. ट्रांसफर टू स्टैट्यूटरी रिजर्व. Every year some part of the profit has to be transferred to statutory reserve according to the provisions of the Banking Regulation Act. RBI has given the instruction that every bank must keep a certain proportion of their income to statutory reserve. Next video I will explain you in detail regarding the statutory reserve. So transfer to statutory reserve, transfer to other reserves, proposed dividend, then balance carried over to balance sheet. For example, if 1000 is the total here, the same 1000 total you should take it here. 1000 should be taken as the total of appropriations. From this 1000 subtract amount transferred or transfer to statutory reserve, you minus transfer to other reserves minus proposed dividend. Whatever is the balancing figure, that is the balance carried over to balance sheet. Surplus carried over to balance sheet. So this is the format of profit and loss account. Now briefly we'll learn what are the items that will be taken under each of the schedules. Totally 16 schedules are there. 12 schedules you will find in balance sheet and 4 schedules you will find in profit and loss account. 13, 14, 15, 16. These 4 schedules you'll have in profit and loss account. Now we'll see one by one each schedule. The schedule number 1, first schedule, share capital. Capital. The details of the capital should be shown in this schedule number 1. The total amount will be shown in the balance sheet, but the detail of that capital will be shown in schedule number 1. Example, if it's a nationalized bank, so what is the total capital applied by the government? Then if it is an other banks, then how much capital has been contributed by whom? And what is the authorized capital of the bank? What is the subscribed, called and paid up? All the details of the capital should be shown in schedule number 1. Second schedule, reserves and surplus. In this schedule we take statutory reserve, capital reserve or any other reserve and balance carried over from the balance sheet. Balance carried over in P&L account. In profit and loss account, last item, balance carried over to balance sheet. This item will be taken in the reserves and surplus. So third is deposit. The bank will accept a different type of deposits from the customers like demand deposits, term deposits, fixed deposits, SB deposits. So all the different types of deposits should be taken in schedule number 3. Now borrowings, schedule number 4, borrowings. The bank will also borrow. It will borrow from India and also it may borrow from outside India. So we have to state clearly how much amount is borrowed in India and how much amount is borrowed outside India. Similarly, borrowing may be made from RBI or other banks or other institutions. The complete classification should be stated in this borrowings. Then other liabilities and provisions. This is the 5th schedule in liability side. 5th schedule, other liabilities and provision. In this schedule we'll take bills payable, inter-office adjustment. This is also called branch adjustments. Branch adjustments. These branch adjustments, the detail of what is branch adjustment, what is inter-office adjustment, next video I'll explain. But time being, if it is showing a credit balance, because this branch adjustment or inter-office adjustment sometimes may show debit balance, sometimes may show credit balance. If it is showing credit balance, then we should take it in schedule number 5. If it is showing debit balance, it will be taken on a schedule number 11. Schedule number 11. तो debit balance रहा तो 11th schedule में, credit balance अगर रहेगा fifth schedule में. What is that item? Inter-office adjustments or branch adjustments. Next, interest accrued, which is payable, credit balance, others including provisions. In the next video again I'll explain what are the items that may come under others including provisions. Provision for taxation, proposed dividend, etc. Now this is the total. Fifth schedule over. Now sixth schedule will come in assets side. First asset is cash with the RBI or balances with RBI. So cash in hand and balances with RBI. Both this cash in hand and balances with RBI. This will be taken in schedule number 6. Now schedule number 7. Balances with other banks, money at call and short notice. Balances with other banks, money at call and short notice. And what is this money at call, short notice? In the next video I'll explain the detail regarding. Right now in this video you have to remember the format and what are the schedules. What is the format of balance sheet? What is the format of format of profit and loss account, and how many schedules are there? In each schedule, which are the items to be taken? That you have to remember in this schedule. In the next, I'll give the explanation of all the terms which are using here. So balances with other banks, money at call and short notice. 7th schedule. Now 8th schedule, investments. Now investments are categorized into investments in India and investment outside India. In India, the investments may be government security, other approved security, shares, debentures and bonds, others like gold, investment outside India. So if the information is there in the problem, we have to classify all, we have to show all the different types of investments in schedule number 8. Now schedule number 9, advances. This is very important schedule. Advances are nothing but the loans. The bank will not keep the money with themselves. The deposits which are received from the customers, those deposits will be given in the form of loans and advances. The loans and advances will be shown in 9th schedule. Bills discounted in purchase, cash credits, overdrafts and loans, term loans. So remember this. Bills discounted and purchased, cash credits, overdrafts and loans and term loans. Right? This will come under schedule number 9. Now schedule number 10, fixed assets. Under fixed asset, premises and other fixed assets. These two items. Right? Next, other assets. 11th schedule, other assets. This is the last schedule of assets. Inter-office adjustment. Just now I told you inter-office adjustment or branch adjustment. It may show debit balance or it may show credit balance. In the problem itself, it will specify DR or CR. If it is CR, take it in 5th schedule. If it is DR, debit balance, take it in 11th schedule. Inter-office adjustment, interest accrued. Interest accrued का मतलब interest receivable. यहाँ भी interest accrued है. This is interest payable. अगर interest on deposits accrued अगर रहा तो वो payable है. That will be liability. उसी तरह interest accrued on advances, on investments, that is interest receivable, that will be taken on the other assets. Tax paid in advance, stationery and stamp, non-banking assets, other assets. These are the items that may come under 11th schedule, other assets. Now your balance sheet will tally. Again I repeat, 5 schedules. Schedule number 1, capital. Schedule number 2, reserves. Schedule number 3, deposits. Schedule number 4, borrowings. Schedule number 5, other liabilities and provisions. 6th schedule, balance, cash in hand and balances with RBI. 7th schedule, balances with other banks, money at call and short notice. 8th schedule, investment. 9th schedule, advances. 10th schedule, fixed assets. 11th schedule, other assets. Over. Now below the balance sheet, you will have 2 items. Contingent liabilities, 12th schedule. Bills for collection. No schedule. Now 12th schedule, contingent liabilities. Actually, contingent liability is not an actual liability. It is a conditional liability. It's the liability which is dependent on some event. If that event happens, then it may become a liability. If that event does not happen, it may not become a liability. So, conditional liability. So, what are the items? Claim against the bank not acknowledged as debt. Some parties have claimed some amount from the bank, but the bank has not yet acknowledged it. So this claim may get materialized or it may not be payable. So till that time it will be shown as a contingent liability. Then acceptance, endorsements and other obligations. The detail of this I'll explain in the next video. Many terms we are coming across here which have some technical meaning, specific meaning. Example, money at call, short notice is there. Then acceptance, endorsements, other obligations, claim against the bank not acknowledged as debt, inter-office adjustments and cash credits, overdrafts, loans. ये ऐसे terms है, इसका technical meaning है, explanation is required. You have to understand that. Don't simply think that we have to take this item onto this head, this item onto this schedule. ऐसी knowledge नहीं चाहिए, उसका conceptual clarity चाहिए. Money at call and short notice, इसका मतलब क्या होता है? What does it mean? Similarly, acceptance, endorsements and other obligation, what does it mean? Loans, advances, cash credit, what is the difference between these? So all these things I am going to explain in the next video. Now 12 schedules are over. Balance sheet part we have completed. Now I am coming to the profit and loss account part. Profit and loss account, 4 parts I told you. The first part, income. Under income, 2 schedules are there, 13, 14. 13th schedule, interest earned. 14th schedule, other income. Right? The first, interest earned, 13th schedule. Interest and discount. Interest and discount. Income on investment. Interest on balances with RBI. These 3 you have to remember. Interest and discount, income on investment, interest on balances with RBI. These 3 items will be taken under schedule number 13. Now schedule number 14, other incomes. तो बैंक को खाली इंटरेस्ट एक ही इनकम नहीं है, इंटरेस्ट को छोड़कर अदर सर्विसेज आल्सो द बैंक विल प्रोवाइड टू द कस्टमर्स. तो बैंकर विल चार्ज सम इनकम. So all the other incomes will be taken in this schedule called other incomes, 14th schedule. The commission, exchange and brokerage, profit on sale of investment, profit on exchange transaction, miscellaneous income, profit on sale of land, building and other assets. So these are the other incomes which a business, which a bank may have. So you have to remember carefully. Next video we are going to solve the problem. In those problems, whenever an item comes, commission, exchange and brokerage, you should say it will come under schedule number 14. Profit on sale of investment, profit on sale of land, building, other assets. So these items will come under 14, miscellaneous income. Now 15th, income part completed. Now expenditure. तो एक्सपेंडिचर में 3 आइटम्स है. फर्स्ट 15th शेड्यूल इंटरेस्ट एक्सपेंडेड, 16th शेड्यूल ऑपरेटिंग एक्सपेंसेस, देन अनशेड्यूल liabilities, other liabilities and not other liability. One item is the provisions and contingencies. That item is provisions and contingencies. It does not have any schedule. So first, interest expended. So interest on deposit, interest on RBI and interbank borrowings. इंटरेस्ट ऑन डिपॉजिट, पब्लिक लाके बैंक में जो डिपॉजिट करेंगे उसके ऊपर इंटरेस्ट देगा, इंटरेस्ट एक्सपेंडेड. उसी तरह बोरोइंग्स, द बैंक में बोरो द मनी फ्रॉम आरबीआई और एनी अदर बैंक, इंटरेस्ट पेड ऑन बोरोइंग्स, दैट विल कम अंडर इंटरेस्ट एक्सपेंडेड. ऑपरेटिंग एक्सपेंसेस, ऑल अदर एक्सपेंसेस ऑफ द बैंक, ऑल अदर एक्सपेंसेस ऑफ द बैंक विल कम अंडर ऑपरेटिंग. तो एक्सपेंडिचर में जो नहीं आया, जो एक्सपेंडिचर में जो आइटम्स नहीं आए, वो अदर एक्सपेंसेस में, ऑपरेटिंग एक्सपेंसेस में लेंगे. एग्जांपल, पेमेंट्स टू एंड प्रोविजन फॉर एम्प्लॉइज. एक्चुअली दीज आर द सैलरीज, बोनस एटसेट्रा व्हिच आर पेड टू द एम्प्लॉइज. तो पेमेंट्स टू एंड प्रोविजन फॉर एम्प्लॉइज, रेंट, टैक्सेस एंड लाइटिंग, printing and stationery, advertisement and publicity, depreciation on bank's property, directors fees, allowances and expenses, auditors fees, expenses, law charges, postage and telegram, repairs and maintenance, insurance, other expenses. These are the example of all the items which may come under operating expenses. Schedule number 16. So I'll conclude this video, but just by having a recap of all the points what we have discussed. We have discussed about the definition of banking. We have discussed about the books of accounts to be maintained, slip, system of ledger posting. These 3 concepts we have seen. Then preparation of final accounts. Final accounts consist of profit and loss account and balance sheet. The new format has been prescribed by RBI since 1992. It is applicable. So it is a scheduled based final accounts. Schedule based. So totally 16 schedules are there. First 12 schedules in balance sheet. and 4 schedules in profit and loss account. The 12 schedules are here. Capital and liabilities 5 schedule. Capital 1, reserves and surplus 2, deposits 3, borrowing 4, other liabilities and provision 5 total. Then 6th schedule, cash and balances with RBI 6 set. 7th one, balances with other banks, money at call and short notice. 8th schedule, investment. 9th, advances. 10th, fixed assets. 11th, other assets. Total. Over. The balance sheet will get tallied. Below the total, contingent liability, schedule number 12. And last one, bills for collection. No schedule. That's all. Balance sheet. Income statement, 4 parts. The first part, income. Second, expenditure. Third, profit or loss. Fourth, appropriation. First part, income, 2 schedules. 13, 14. Interest earned and other income. Interest earned and other income 13, 14. Expenditure में 3 items है. First, interest expended 15th, operating expenses 16, and provisions and contingencies, there won't be any schedule. I'll explain you in the next video regarding what are the provisions and contingencies. Total. Income minus expenditure will get net profit for the year. If profit brought forward is given in the problem, which is coming from the last year, that will be added. Appropriations में transfer to statutory reserve, transfer to other reserves, or proposed dividend, and the balance carried over to balance sheet. That's all. That's all. Now schedules. All the schedules we have discussed. Hope you got a good command on the theoretical concept of how to prepare the final accounts of banking company. In the next video, again I'll explain some points which we have come across here. Then we'll start the problems.